And you are now
Great.
live.
Thank you very much, Annie. So we're just going to start out with a quick roll call and an A/B check just to make sure we can hear everybody. Some of you I know I've already been speaking with, but just to go through the full roll. Councillor Cleary.
Hello, Councillor Sean Cleary, representing Halifax West, Armdale, District 9.
Thank you. Kevin Hollis.
Here, I'm not sure who I'm representing, just myself, I guess.
Thank you, Kevin. David Martin.
Present.
Great, thank you. Liz McKenzie.
Present.
Great, good to see you. And Robert McQueen.
Present.
Thank you very much. Renee.
Hi, nice to see everyone.
Hi, Renee. And I don't think Councillor Russell has joined yet, so we'll move forward. First item is approval of minutes. Does anybody have any corrections or amendments from the minutes of the meetings from the last meeting that we had in March 8th? No?
No.
Could I have a mover and a seconder for the motion, and Annie can post that into the chat session?
I'll move to approve.
I'll second.
Great. So Councillor Cleary has moved, and I'm sorry, who was the seconder?
Rob McQueen. Yeah.
Great.
Or
Thank
vice
you.
versa.
Next item, approval of the order of business and additions and deletions. Annie, do we have any additions to the agenda today?
Thank you, Madam Chair. There are no additions to the agenda today, but I actually, if we could just step back to the approval of the minutes. So we had a mover and a seconder, but would just like to see if we can get approval from the committee at large. All good.
Sorry about that. We don't have the question here. All those in favor, please say yay.
Yay.
Okay.
Okay.
All those opposed, say nay. And the motion passes. Thank you, Annie. Okay, now let's move forward. Approval of the order of business and approval of additions and deletions. Are there any additions to the agenda?
Thank you, Madam Chair. No, there were no requests for additions or deletions to today's agenda.
Great. So we need a mover and a seconder as well.
Happy to move
for the agenda.
Approval of the order of business.
Do we have a seconder?
Second that.
Thank you. Annie, did you get the names? You got the names. And again, the question, all those in favor signify by saying yay.
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 All those opposed signify by saying nay. And the motion passes. We have no business arising out of the minutes. And also call for declaration of conflict of interests. Does anybody have any conflict of interest that they wish to declare? No, no conflicts. Consideration of deferred business, we have none. So that moves us into the reports. And we're going to do a quick PowerPoint presentation with this. Just makes it a little bit easier to go through the report when we're in this mode, as opposed to me reading from a report. I believe, Liam, you're going to run the PowerPoint slide. Thank you. Perfect. Thank you. So I assume that everybody's had a chance to review our latest report for ending March the 31st, 2021. And that's also obviously a year-end report. Next slide, please. And next slide. So just a quick review of our investing activities. We didn't actually make any money market investments during the most recent quarter. We did carry $231.8 million of money market instruments into the quarter. And our policy is to rebalance semi-annually, so there wasn't any need in this particular quarter. Our operating fund investment income was 206,666 versus a budget of 187.5. The positive variance really was from the higher cash balances than we anticipated. The rate of return for the quarter was 0.15%. We projected 0.21%. The negative variance is primarily due to the government half of the portfolio. The performance was fully now into the post-COVID-19 instruments. We knew that at the beginning of this year, we were going to have higher than expected returns. As the year went on, it would drop off. It still balances out to approximately what we had initially estimated, which was 0.84%. We're at about 0.82, so just slightly below. The money market investments were a little bit lower than what we had hoped they would be. Next question, or sorry, next slide. So we can see here, this is the graph of the last 5 years of our operating fund. You can see that for the most part, every year it trends the same. 2020, 2021 was slightly different. We saw that the peak of the cash balance in the spring was a little bit moved. That is moved to the right, and that was because we did delay our tax due date. Other than that, it ended up in the same place at the end of March as it has in the other years. And also a slight variance in October. Again, it's just really a matter of we had a little more cash sitting there for a little longer than we normally would. Next slide, please. Our investment accounts, the balance at the end of the quarter was 312 million. The income exceeded equivalent risk BAs by 596,000, almost basically close to $600,000, 596,738, and that's across the entire portfolio. The quarterly return was 0.21% on our investment accounts, and the 12-month return is 0.88%. Next slide, please. Money market performance for the quarter, we had an annualized rate of return of 0.17, and the 12-month return, so year to date, was 1.12. That's obviously quite a bit higher. That is because for the first half of the year, pretty much, we had money market investments that were still at pre-COVID rates, so they were still around 1.78. Those were fully matured by, I believe, early November. So we've been sitting with our portfolio in post-COVID rates since then. In comparison, the average return of a one-year T-bill was 0.15%. This is the first quarter, as I note, that all money market holdings have been purchased at post-COVID rates. So we're down around 1.5 to 0.23 or so is where our investments are sitting at. 0.15 to 0.23. Overall results. So overall, our return was at 0.15%, as noted before. That does exceed both the median and the 5th percentile of our benchmark rates, which comes from RBC. We use their pooled money market fund in order to benchmark our results. We did exceed them both in the quarter and the 1 year, both the median and the 5th percentile. We do have to exceed the median as part of our policy. That's what we aim for. And the investment bank accounts do continue to be largely responsible for this performance. As you can see, the money market is sitting around 0.17, whereas our investment accounts are quite a bit higher. Next slide, please. So as noted, we are saying that our investment policy objectives have been met. Well, preservation of capital, liquidity, and competitive return on investments is what we are looking for. I can confirm that there was no loss of capital during the quarter. We always had sufficient cash available to meet all of our operating requirements. And we did have a competitive return on investments when compared with the set of pooled money market funds that we compare to. We exceeded both the 5th percentile for the quarter and 12-month returns. As I said, our objective is to always exceed the median. So by exceeding the 5th percentile, we consider that to be a good result. Next, please. So a little bit about the outlook for the coming quarters and year. It has gone a little more positive than it was for the last probably 2 or 3 quarters that we have been looking at the Bank of Canada's signals. They've actually started to turn a little bit more positive. They think that there may be an ability to move the target, the overnight rate from its current basically lower bound sometime in the second half of 2022. It is a little more uncertain, but what we are seeing is that the effects of the pandemic are not quite as bad as first anticipated. Industry and manufacturing has actually been able to adjust a little more quickly and a little more easily than they originally thought they would. So the guidance now is that we may expect to see the overnight rate move sometime in late 2022. We are seeing some decline in our bank account rates. We have had banks adjust the rates down because there is, as you probably know, some extra cash in the economy due to the slack. Those investment bank accounts, though, do continue to provide effective rates of return, as we saw, is about 0.88% versus 0.17% in the money market. So our strategy will remain to maximize our returns by leveraging those accounts. And also keep in mind that their liquidity does add certainly a good safety factor for us. We can move out the money basically anytime we need to, instead of having to, sell a T-bill or so on. So I think that's about it. Was there any other questions on this?
Sorry, I just had one question on the high interest savings account, the bank account rates. What's the outlook on that? Were you saying that it may come down, or?
We have had a couple of banks that have reduced their rates with us. We may see 1 or 2 more, but they're not terribly drastic. We had one that was a little bit more than we'd like to see. But generally, I think the banks are trying to keep it at the current rate for as long as they possibly can, especially now if they're seeing a light at the end of the tunnel. If the economy is starting to move and there is going to be a little bit less slack in the economy, then that money should start to move through, and they won't mind giving us the rates. We're also hoping to get back to where we were with the banks that have reduced our rates. So we think probably for the next few quarters anyway, it's going to be status quo. I don't think it's going to move up for sure. There may be another bank that may reduce, but we haven't heard anything definitive.
Thank you.
You're welcome. Any other questions? No? Okay, so we have the draft investment policy advisory committee report that goes to the audit and finance committee for quarter ending March 31st. This report was circulated to everybody. It's a staff report. It has similar data or similar information than our report has that we just reviewed. Slightly different format, but we will need again another motion. So if I could have a mover and a seconder. And again, Annie, could you put the motion into the chat?
I'd be happy, Vicky, to put that on the floor, that the Investment Policy Advisory Committee recommend that the Audit and Finance Standing Committee forward the Investment Policy Advisory Committee report quarter ending March 31st, 2021 to Halifax Regional Council as an information item.
Thank you, Councillor Clary. And could I have a seconder?
I'll second.
Thank you. Rob McQueen seconds. You just missed it by this much, Kevin. So the question, all those in favor signify by saying yay.
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 All those opposed signify by saying nay. And the motion carries. So the last item on the agenda, wanted to do one change to our treasurer's report. I don't put this into the slide deck typically. I'm not sure if you've been seeing it in the report or not, but it's a very customized benchmark that we had been doing for the last year or two. And Liam, could you perhaps put the PowerPoint slide back up? You may have noticed in the report towards the end, we talk about, it's basically a bespoke benchmark that we have been implementing where we do a weighted average of the T-bill, a 1-year T-bill and a 90-day banker's acceptance. We weight that with our portfolio to come up with a weighted average benchmark return. And then we've been comparing our weighted average return, which is essentially our full return, to that. We put it in there for a while just to see if it was significantly different than the RBC pooled money market fund. We're seeing it's really not significantly different. For this most recent quarter, it was 0.18%, which is, over the course of the entire portfolio, we were able to exceed that for the year. That is an annual rate. The 0.18 is an annual rate, not a quarterly rate. Whereas our 1-year return was 0.82%. We're just wondering if anybody would have any objections if we stopped reporting on this benchmark in the future. As I said, it doesn't really vary very much. The other issue that we have with this is because it is so custom, we can't really compare our results. All we can say is we exceeded it or we didn't. Whereas with the other benchmark that we use, we can actually say where we fell in, whether it was the median, the 5th percentile, or what have you. So if there's no objections, I think going forward, we will take that out of the report. Also wanted to open it up to just let you know that if there is anything in the report that you would like to see added, if there's something that you thought, gee, I wish I knew, let me know what that is, and we're happy to make changes to that report. Or if there's anything, conversely, anything in there that you think, well, this isn't particularly helpful, then let us know that as well. Always open to make changes to this report. The one thing we have started to do in the last couple of quarters, you may not have noticed it because you hadn't seen it before. We report our entire investment income as well as our operating fund income. So we will be doing that going forward as well. So you can see against the entire portfolio, this is how much investment income we had. And we are also reporting what the operating fund income is, investment income.
Vicky, just a couple of quick questions. So on the custom benchmark, how long has that been there? Why was it put in? And if it doesn't, I guess, was the other one added after the fact, or have we always tracked the two of them simultaneously? Or just give me a bit of history on it. Why was it put in the first place?
Oh, yeah, sure, Councillor Clary. So it was put in about 2 years ago. We had a member of the Investment Policy Committee who wanted to see the duration-based benchmark. The pooled money market funds can sometimes be of shorter duration, whereas we have some longer duration instruments. So what he wanted to see was a benchmark rate based on specific and bespoke instruments that we keep in our portfolio, as opposed to what RBC Money Market has, which is a little broader. They have commercial paper, they have short-term money market, they have longer-term money market, and they even have cash. So that benchmark can be a little conservative, and he was thinking maybe we should be looking at something that was a little less conservative. It was put in, like I said, about 2 years ago. Up until then, we had been using just the RBC Money Market Pooled Fund. And we put it in to see if it made any substantial difference. What we're seeing is it's really not.
Yeah. Are there any circumstances like, if you made assumptions about, well, if we had in our portfolio X and Y instead of what we have currently, would there be value in having it there in terms of, and I don't know if you've run any of the numbers to see if it would. I'm just thinking if it's always tracking very similar to the RBC, are there circumstances where it wouldn't? And would we ever find ourselves in those circumstances?
We probably would never find ourselves in that circumstances. The RBC Pool Money Market Fund typically has 23 to 24 different funds sitting in it at any one time. And we did actually take some time to dig into those particular funds to see what the makeup was. And while we did see some that had some more aggressive holdings, things like commercial paper, things like longer term GICs and so on, for the most part, they all had very similar portfolios to what we have, very similar holdings to us. They had cash, which is, sitting in it's not just kind of sitting in a checking account. It's cash that is earning interest. They have a lot of money markets. Some of them are short-term, some of them are long-term. So similar to us, we have mostly long-term, but we also have some shorter-term duration money market funds. I don't see over the past 2 years, we have never seen a situation where it really was significantly different from what the RBC pool money market fund is. Again, we were kind of looking for it to see if it was. It may be, it usually kind of trends with what the 1-year T-bill is. That's what it typically trends with. Or Banger's acceptance. That's sort of where it goes. And it's just because the weight of our portfolio is primarily on the financial part. So that's where the Banger's acceptance rate comes in. And because that really runs in line with the money market right now, with our T-bills, they kind of work out to be about the same amount.
Okay, that's good. Thank you.
Okay. So it's the 1-year T-bill plus a little bit is where it usually falls, which is pretty conservative. Does that help explain it?
It does. Thank you. And based on that, I mean, I have no issues with removing it.
Okay. Anybody else have any questions or any other suggestions for benchmarks? I think money market pooled fund, we've been using it for quite some time, and it is in our investment policy that we will have to continue to use that. Okay, so I think we'll just assume that going forward we can do that. And again, I just open the floor up. If at any time you think of something that you'd like to see changed, you can email us or you can bring it forward in a meeting. Added items. There's been no added items, so I don't think we need to worry about that. The date of the next meeting is September 13th, 2021. I will be my first day back from vacation, so it should be a fun day for everybody. And just need a motion to adjourn.
I'll make the motion.
Thank you, Kevin. And we don't need a seconder for that. So just going to ask our legislative assistant, Annie, is there anything else that I missed that I need to go back to?
Hi there. No, you are all good. Meeting is adjourned, and yeah, we'll see everyone on September 13th.
Great. So the meeting adjourned at 12:25, and I will see everybody in September. Have a great summer, and
You
we'll
too.
see you soon.
Thank you.
Thank you. Take care.
Thanks, everyone.
Thank you.
Bye
Thanks
now.
so much,
Bye.
everyone.